The topic for our panel is a fairly interesting one. It is the need for regulatory moderation for sustainable growth of fintechs. Fairly topical one. And we have an esteemed panel with us across various fintech verticals. So we plan to do this in a few parts. First, it'll be good to go around the panel to get opening thoughts from everybody to see what they feel on the topic, whether it is even a relevant topic, because very often one feels the topics may be either too futuristic or a bit dated. Hopefully not for this one. So let me start with Bharat ji.
That is first.
Yes, Priyanka ji, on your thoughts on the topic and what trends are you seeing?
Thanks, Anu. Am I audible? Okay. I think we are in a very good inflection point from where the country is. I just, came out of the inaugural address, and I was extremely pleased to not just hear about the internet active population, which is around 820 million approximately, but the year-on-year rise of the internet population, which is an 8% year-on-year rise. I mean, with this kind of potential scale, diversity that our country has, I feel, we are in a, as I said, the inflection point where what we are building is not just building for today, but building to last. And I think that's why this topic is very interesting, because that balance of innovation, disruption positively, and sustainability is critical. And I think that's what we see in some form, the regulation catching up with innovation, the technology advancement leading regulation in the right direction, but at the same time, the importance of harnessing the now by letting our fintech ecosystem grow and thrive. So I think that is my opening thought today, that how do we bring this together, and I'm excited about what the panel will come up with. Thank you.
Thank you. Bhavin, your thoughts?
So Anu, what I feel is across the globe, we always see that innovation is happening and then regulations are catching up. Specifically in the sector where we are operating P2P lending, very light touch regulation came up by the Reserve Bank of India in 2017, and regulators have spent enough time understanding the sector over the last couple of years so that they can also understand what is innovation happening, which are relevant. If something is not that much relevant, possibly they catch up with the regulation. So in India, the way regulations are working, I would say it's a relationship between a company and a regulatory and regulator. In any relationship, exact balance cannot be achieved, whatever kind of relationship. So here also it will always be seesaw kind of, that something is going ahead and then another thing is catching up. But the way Indian regulators are working to catch up with the technology innovation, I think that's commendable. So even before we started this discussion, I was discussing with Priyanka and Bharat, because Bharat has been regulator for a long time. The way regulator thinks and the way they want India to lead the global innovation, specifically in fintech side, the approach is very beautiful. We are neither very, very open-ended like US, nor we are close-ended like China or Middle East, but we are letting things happen in the proper balanced way so that socio-economical balance can be achieved via fintechs. So I think very relevant topic, and I'm happy to be here to share our views on behalf of P2P lending industry.
Very, very valid perspective and points, because actually India seems to be evolving in a very Indian way in terms of very hard to take a particular model with regulations. Bharatji?
Good morning. So we all are aware about the terminology called Banana Republic, right? And that Banana Republic itself is, the symbol of nothing is regulated there. Country as our size, the way we are growing, the way we are prospering in all aspects, regulation is part and parcel of our life. And if fintech sector is little bit literal entrant into the whole regulatory gamut. But if we go back in 2005 era where Basel III came, right, where operational risk was given enough emphasis. What is emanating out today and what regulation what we are seeing today, it is not just overnight thought process of the regulator or those who are making regulation for the country, but it is something derived out of the large model which is adopted globally. And therefore, we see all of a sudden there is change in the approach. No, exactly not. It is a well thought process. Regulation has to be part and parcel of your life. If we want to become the superpower, big economy by 2047, then regulation is going to be there forever. You will see much tougher regulation tomorrow than what is there today. So let's be prepared for that.
Great points, Bharatji. So before I go into the weeds, I was looking at some statistics before this panel. There are 106 banks in India, 21 private sector, 22 public, 3 payments, 12 odd small finance, and 45 foreign banks. 9,000 odd NBFCs, 2,000 plus have been struck off in the last 2-3 years. Of the NBFCs, 15 are upper layer, which are the topmost. Around 400 are the old systemically important, which is 500 crore and plus NBFCs. More than 112 payment system operators in counting, because who gets a payment aggregator license or who does not, or who gets a cross-border PSCB, who does not, we'll see. 45 plus asset managers, I mean, the list goes on. And in the last 6 months, around 60 consultation papers have been issued by SEBI. Multiple new regulations by RBI, and 60 plus orders in the last 3 years, public orders by RBI, looking at KYC, data sharing, outsourcing. So with this background, Bharatji, the question for you is, what is resulting in this increasing regulatory scrutiny?
I do not agree with the word called scrutiny. It is enhanced supervision. Because when such a big sector is evolved in the last couple of years, which is predominantly a center of everything what you are doing today. Let's go back to the conventional banking, like before 2008 or so. There was no kind of interoperability among multiple players. What number of what you just said, everybody was working as an island. Now, today, in my previous organization, we have done Colgateization. What does it mean by that? You just walk in any ATM, or you just log in on any e-com website. As long as you have money in your account, irrespective of which payment aggregator, which bank is acquiring, which card you are carrying, you are able to make a payment. Now, if that's the case, the aggregation has happened at that level, why not this further enhanced control as required? Because, see, earlier, if one bank, let me give one example of Global Trust Bank, which failed in 2002 or 3. The domino impact which it has created on the ecosystem was much, much lesser compared to a bank which failed today. The reason why, because we are interconnected so much so, and interdependency are there, and everybody is, well at market and credit risk. But when it comes to, risk emanating out of technology, risk emanating out of the fintech world, because earlier it was your bank, your ATM, your CBS, your infrastructure, your customer, and it was cup of tea between the branch manager and the customer. Here, I am sure that like me, there are many people sitting in this audience, they have not visited the branch for many, many years. There's no need for that, right? But which has made this sophistication in your life? You are seeing the one side of that. The other side of, because let me give a best example of UPI. When you are putting your 4-digit PIN on that common page, it looks very simple, very, and that's the story which all, talk worldwide. But you are seeing the simplicity what we have brought in, but I only know that how complex it is at the back end, because, to make such a large scale system with a lot of complication is not that easy. But there are a lot of supervision, a lot of, control, a lot of scrutiny, I would say, or control have gone into this. But in today's scenario, when your bank is extended to third-party API providers, the TSP, the TPAP, multiple people, everybody is running a bank, right? So in that case, there is no assurance that if a bank which is putting a control in their system, the same are extended to everybody who is connected to their system. And therefore, the regulator has larger role to play because the fintech system, somewhere the kind of, arrogance, let me be very, very vocal about this. Somewhere there's arrogance in the fintech world that this regulator does not know anything about this. Because we are fintech, we are an innovator. No, you are absolutely wrong. Because the regulator has so much depth knowledge. Let me give one practical example. How many of you are using UPI today? Can you raise the hand? Let me ask other way. Who is not using UPI in this room? Nobody. Everybody is using. You all are aware about UPI. Were you aware about UPI in 2016? Anybody is there can raise a hand who knew about UPI except me? Nobody is there. I was knowing about UPI in 2016 because I was part of designing of UPI. But if I ask 2014, even I was not. But the same regulator has come out with a vision paper in 2005 that India as a country need to have retail payment system for such a large democracy where everybody will use this, technology and ease convenience and affordability for making payment. I think that's where we need to understand that regulator is there to enable your business. They are not a roadblock, they are not a speed breaker. They are enabling you to wait, watch and proceed. But one word of caution, they will allow innovation, they will allow frictionless experience, be it payment, be it any other business. But they will not allow any innovation at the cost of risk and compliance. That's the bottom line from the regulation point of view.
Many points, two takeaways for me. One, vision statements, speeches by RBI senior functionaries give us an insight into the future. And fair point, very often only the FIGs and not the fintechs look at the forward. They are typically caught up in, comma, full stop of what has been issued. So one can have the 2005 example you gave. One can know what will happen, it's just that you have to have a patience for 10 years. Second, the global trust bank example you gave. And it's a very fair point. Increasingly, when large NBFCs and banks fail, system clamps up. It's a systemic risk. And that's my question for Bhavin. Is it that large should be looked at differently and mid to small differently? Because one constant argument one hears is everybody is painted with the same brush. As an example, was there a need, was there a systemic stress with consumer lending, which say led to digital lending changes? There were articles recently about P2P lending, for example. So do we need a bit of a graded supervision where the bottom, there's nobody bottom, but mid does not get tagged with the top?
I think absolutely yes, because see, you can't treat every organization in the same way. If you treat P2P lending company with couple of 1,000 crore worth of AUM in the way you are treating bank as a regulator, then possibly it will suffocate and die its own death, right? And I think it's very beautifully addressed in the current regulation, because the regulations which you are referring is RBI regulation where they have put up different tiers. So P2P lending companies are put up in the base layer. Possibly they may revise in future. But it is very, very important because compliance cost goes drastically high as and when you start treating everybody in the same way, right? And specifically with smaller companies, the beauty is, sorry, the beauty is they have power to innovate and move things much faster. The moment you become larger and larger, that power goes away from you. So possibly regulator also looks forward to smaller companies to innovate faster and then possibly grow on those innovation, or larger company to adapt those innovations and possibly take it to the public. So graded regulations are always important unless the product is very, very commoditized kind of. So for example, in case of mutual fund, I would say it's very set product right now. Then you may not require it in the graded version because it is very clear to everyone, and possibly compliances are also very clear and not that much complex. But if we are looking at lending product or any P2P lending kind of product, then yes, absolutely, it is very much needed. And currently it is addressed as far as the current regulations are concerned.
Just to follow up on that, I know I'm going a bit off script.
Even the previous one was not scripted.
Speaker selection was a bit. So I thought it may, given the lending topic we started with, but it will be a benign, off-track question. I totally forgot the question only.
That's my art.
No, the question is, if you see, there are the market perception is there are two sides. There is a banking world and there is a non-banking world. No, there is a banking world, there is a fintech world, and there is an NBFC world. And banks and NBFCs have mutual coexistence. They know where the lines are, but everybody is out there to get the fintechs. It's a perception. One is heard from various people, for whatever reason. And the allegation, the complaint the fintechs have is we don't have a path to NBFC licensing, the returns, right? We don't have a path to a banking license. So I think my question is not on differentiated banking license, but bespoke licensing.
Yeah, so see, I don't see the world the way you are mentioning, right? I feel the majority of the perception lies in our own mind. The moment you start differentiating and start looking at the banking world as a different, NBFC world as a different, you will keep running your own thoughts in that world, and I don't think majority of the founders will also think on that lines. As far as your question is concerned related to whether regulators should look at this in a different way or different lens, I would say yes. Because the way digital lenders or technology-based companies do their interpretation about things and the way they build solution, their DNAs are completely different. So for example, if any regulator has been visiting offline-based lending institution, the way they will conduct audit over there and the way they will conduct audit with digital lender, it is completely different, right? Or ऐसा भी नहीं है कि they are not adapting to it, but yes, lens has to be completely different because of the DNA of that company and because the kind of record they keep are more of a digital way. So it is important. I think slowly, gradually it is happening. And I feel regulator will be much more adaptive on that part because they know the digital has a power to reach to the end mile user of the country.
Very, very fair points. And that brings me, Priyanka ji, to you. Natural ducktail is anything you believe the industry can do differently to address. One thing is to say regulators can do, being a cop is a thankless job always. Nobody pats them. We always believe something is, traffic cops, best example, right? But wearing the hat differently, anything the industry can do differently to address their concerns, and not asking in self-regulatory organization, SRO, those are institutions. And in what areas you feel the industry can itself, do a bit of an introspection to try and proactively or otherwise give confidence to the regulators and in turn the government, because one also feels both are interconnected. You see AML, KYC are no longer RBI issues. They are a very national security government issues. Similarly, data going forward is no longer a SEBI or an RBI or an IRDA issue. There's a federal law. So to again rephrase the question, anything industry you believe should do differently?
So before I answer the question, I'm going to share an anecdote. We're all, I think, consuming short form videos, right, these days. And my earlier job was with Meta, so Instagram was family. A lot of short form videos, throw good information. And yesterday when I was, looking at one, it was by a small bite by Jeff Bezos, and he was talking about, he usually gets one question, which is a common question across all his interviews, is what is it going to change in the next 10 years? And while he likes to answer that, he actually prefers a question on what is not going to change in the next 10 years. And this is a very, I think, fine, nuanced, thought on what is not going to change in the next 10 years in financial services. If I actually make a, parallel to that video, Consumer protection is not going to change. Data protection is not going to change. Financial stability of the entity operating like the financial institution is not going to change. Thus, regulatory concerns around these three factors are not going to change. Thus comes our law, which is the data protection law. Now, India has one of the bedrock foundations of data protection in place, and we'll soon get the rules as well. So, for a population our size, for an internet active audience our size, we have a robust data protection law in place. Thus addresses privacy by design, consent by design, and thus compliance by design. So to the point that you asked earlier to Bhavin, actually compliance has become a part of the fintech DNA as well, because, and I think the BFSI sector, especially fintech, is the top hiring community for compliance talent, because they recognize this. So as a fintech, when I look at it from FI's aspect as well, or from the fintech community, I think both sides are walking their distance. The regulators coming up with very innovative solutions like the SRO framework, a hackathon where they're expecting fintechs to participate and come and talk about what they could do disruptively within the regulatory regime. The sandbox is a great example. So that's the regulatory part. The fintechs are also getting more and more attuned to knowledge sharing, transparency, building compliance by design, coping with the new laws on data protection and adhering to it. Data localization was a great example when it happened back then. So I think it's a balance, and I like the topic, that's why it's very topical. It has to be a journey which is walked both ways, because as I was saying, fintech is here to stay. It is not going to change for the next 10 years, because it's collaboration that will evolve, and not one community over the other. And I think that's...
I'm Priyanka reminded of somebody who said, whatever rules of banking Medici's created in Florence in 1500s will not change, because the fundamentals have not changed. And the word bank comes from bench from those days. But moving to you, Bharatji, just a bit of a 2B, a slight modification to the question. See, everybody knows these things. What Priyanka ji said just now is very known, right? Which is good conduct, good governance, good practices. But why is it not happening? And I'm not saying, greed versus maturity. But what is it that, the market participants today, when they know, why is it still not happening?
So, I was fortunate to be a part of the most successful startup of this country, which is NPCI. I was one of the founding team member and worked as a chief risk officer for almost 9 years. So I have seen the growth of the fintech industry, because fintech started that time. But you know why there's a hue and cry? Because when are you treating your toddler as same as what you were treating him at the age of 2 years, and now he has become 20 years or 15-year-old? Your treatment will be different. You are not expecting the same behavior from that boy who was just a year old. So if one hand industry is growing, but they will know we will play as a kindergarten while we are mature in terms of age. So that is the big difference coming here. Because you know what, when it comes to regulation, and again, don't get don't take me wrong, but we are in the current era, where there is a AR and there is AJ. These two need completely different terminology. What is AR? We believe that there is an aggressive regulator. The other hand, we are into aggressive jugaad. Both cannot coexist. When you are doing in jugaad kind of situation, and you believe that the regulator will allow that to happen, I think we are absolutely wrong, kind of understanding. Because see, when I'm saying about my previous organization, when we were working in 2010-11, when we started interoperability across the bank sector, we launched RuPay, we launched IMPS, we launched a check truncation system. We came with innovative way of NACH, then came UPI, then FASTag, and all this. So every stage, every product, we have gradually increased our control. We added newer control, and at the same time, The regulator behavior was completely changed right from 2011 till 2021. They started, think differently, because the risk what we are bringing collectively for the ecosystem is much bigger today than it was what it was 2010. So if we are seeing from that perspective that no, we are innovator and we are a fintech, mind it, and taking from your bench point of view, that the accounting principle, debit and credit, hasn't changed even direction. The account debit is this side and credit is this side. That will remain ever. But today you are completely relying on technology, and technology is very, very dynamic. On the name of fintech innovation, you are bringing lot many newer tools, newer technology, newer languages, newer protocol and everything. But are you safe using those technology? Can you say that ever nothing is going to happen with what innovation I have done? No, it is impossible, right? So if technology is dynamic, therefore the risk emanating out of technology are equally dynamic. And so your regulation will also going to be such a dynamic, because if we see last history of 10-15 years, it's like a kabhi khushi kabhi gum. Somewhere you find that some regulation are very, very, like the moment RBI opened up the PAPG license and all other innovative things for you, we all started, oh my God, what a wonderful opportunity for us to grow. But at the same time, a data localization came, or two-factor authentication came, or right now, certain things which are happening in the market. We should take this thing as, as a balancing act. We should never see only one part which is coming as a, hurdle or bottleneck for you to grow. No, it is absolutely no. Regulator has far better vision than us. And let me conclude on one beautiful part. We believe that the great innovation happen outside of India and mostly in the Western world. If you are in that syndrome, you are absolutely wrong. The great innovation happening right now here in India. The world is taking clue from you. World is taking example from us. World is taking, all sort of know-how from India as far as fintech world is concerned. So if what we are doing it is, and with your point, madam, we are not doing for today, we are not doing for tomorrow, we are doing for ages and century. And we are not doing only for India. World is going to take example from us. Therefore, look at from that angle. Vasudeva Kutumbakam. It is just not a simple word. That is the ethos of country, and that is what exactly happening in this world. So when RBI is taking some step, the government bringing tougher law. It is for the betterment of the society, betterment of the sovereignty, and betterment of our economy for coming future.
You mentioned data localization. And the perceived need for clarity in regulations, particularly one regulator. Do you feel time has come to have an advanced ruling mechanism with all regulators? I mean, many have it. SEBI has it, income tax has it, competition authorities have it. Do you feel the one regulator which does not have it should also have a formal channel?
I think we have missed the bus even, actually speaking. It's not time, we have already late. See, in 2018 data localization came, and in 2019, I have written a book called Data Sovereignty, The Pursuit of Supremacy. We have clearly told in that book, as part of the book, that India has seen a lot of colonization. The first one was the Silk Route colonization, later came Britisher, they have colonized. We are currently at the age where data colonization is happening. We are a product. Where is the better market, bigger market than India, where you and me all are a product for somebody? Sorry, not for your ex-company, but that is true for everybody. And if that is not handled, that is not clamped at this point of time, we will miss the bus. Rather, it is good that the data protection bill has now enacted. Waiting very soon, it is going to become a reality. But I think when you are saying about the proactive mechanism, RBI has done, not only RBI, even IRDA, SEBI, TRAI, RBI, all the regulators are very, very cognizant about the fact that we need to have a mechanism where rather people coming later on, let them be proactive in the repro, let them, like regulatory sandbox. One of the best thing about RBI came out long back. So they are giving you complete boundary, they are giving you playground, you play into that. You have to follow certain rules. So, and at least I know from my experience point of view, they are not bringing anything as a surprise. It is very crystal clear written that you follow 1, 2, 3, 4, and we are there to support you. Otherwise, the miracle what we have done in last 10 years to bring such a large economy on single platform called, the digital payment platform, that miracle would not have happened without the support of the regulator, without the support of the industry, without the support of many players. But in all these things, the regulator is, and regulator will be at the center point.
Slight change in order, Bhavin. Would love to hear your thoughts because as a founder, I mean, you look at it very differently. I mean, founders are used to operating in the gray, but they would love to operate in black and white. A formal advance ruling, and what this route is that I get to ask the regulator and they have to, in a time-bound manner, give me an answer which is public. It is not a private communication. So then, whilst it does not become binding for everybody else, everybody knows that you got this order, which SEBI has done very effectively, though its jury is still out. Do you feel RBI regulated institutions can benefit with a formal mechanism like this?
Yes, absolutely. I think they implemented during the DLG regulation announcement. So they provided some number, but that was not public one. But I think public domain discussion pointers will be really helpful. And just to make a slight correction in your question also, see, we don't like to operate in gray. We are also happy operating into white, black and white, but whenever regulator comes up with something where they feel that there is a scope of innovation, they leave some space to operate. And I think that's what we call as a gray area, which later on becomes white or black. Right, but point is, this will be a really fantastic idea if that is happening, because a lot of time we also reach out to regulator, and because of their own constraint also, they can't clarify everything. Because if they put something in words, that becomes in a way regulation or a word of an institution. But some kind of mechanism will be really helpful. So जो struggle मैंने की है शायद और 50 lenders को नहीं करनी पड़ेगी.
I'm conscious we have just time for a last question round. So let me add something slightly more of future crystal ball gazing. If this panel was happening, say, 3 years down the line or 5 years down the line, would we still have worries on regulatory overreach or need for regulatory moderation? I.e., do you see the industry changing in 3 and 5 years is a lifetime now, right? I mean, what was world pre-COVID? At least I don't know how to live that world anymore. It's changed so much. Or do you feel we'll still have this topic at a panel 3 or 5 years down the line?
So I think this topic will remain there. It will not completely go away, but I definitely see a huge change in last couple of years. So in earlier years, regulator will not reach out extensively to companies, but I see that shift happening after the DLG regulation rollout, and very, very beautifully RBI had conducted various seminars in various cities, invited industry players, heard them, guided on certain points, opened up the hotline as well to guide them on various pointers. So that was one very good example which started, and I believe that will be adopted by other regulators also if they are not doing it. The way yesterday FM has met with few of the big fintech players, and some kind of decision has come up that more regulatory reach out will happen between the companies and the various regulators. So I think the steps are already started. But see, human mind always desire for more. So we will never be satisfied as a regulator that this is enough. And possibly tomorrow, if this reach out will be good enough, then also we may have some more desires. कि अच्छा ऐसा भी हो जाता तो और अच्छी बात थी. So topic may not go away, but the way it is happening in last few years, possibly that will change drastically.
Just a little follow-up on that. The climate we are sitting in right now, it's on top of every practitioner, founder, investor, compliance, legal person's mind. Data, digital lending, given what's happened in the last 3 years, and payment. Payment more from KYC as a pipe, as a plug and play. Do you see new areas of worry after 3 or 5 years, i.e. new stress in certain verticals which may boom, and therefore the need for moderation by regulators?
So one thing which I immediately can foresee is some kind of which will be related to data only, or breach of the technology infrastructures, which will be related to securities. Because I think the way KYC is evolving, next 3 to 4 years, I think next generation of founders will not have this kind of worry at all on their minds. They will feel कि अच्छा ऐसा ही तो होता है, जैसे आज के बच्चे मोबाइल के बारे में सोचते हैं, जबकि हमारे माइंड में इमेजिनेशन होता है मोबाइल नहीं था तो हम क्या करते थे, राइट? वैसा ही KYC के ऊपर होगा, डेटा प्रोटेक्शन के ऊपर होगा, बिकॉज दैट विल बी सेट एनवायरनमेंट, सब चीज़ें सेट हो चुकी होगी. बट आई थिंक सिक्योरिटी विल बी वन इम्पॉर्टेंट पैरामीटर, एंड सेकंड कुड बी fraudulent identification, because then people will not have other options. So possibly this will be a new battleground which will be opened up in front of digital companies.
There's a Chinese saying that in clear water you catch no fish, i.e., so at some level, it results in new models. Like the whole ID verification is an industry itself which has come up now. Priyanka, your thoughts on the same question?
In fact, I want to have this discussion 3 years from now, wherein we're talking about more and more technology advancement and regulation playing catch up and playing ball, both. I also feel the discussion will be not just about KYC, AML, data protection. I think it will evolve to the young India, the Amrit Kal, as we hear from the government in many ways, the journey of India from today to 2047, the rise of economic advancement, and India, or rather Indian fintech building products for the youth of India. Because something that we discuss in our RT meetings, and what FI is trying to build is for the millennials and the Gen Z, who will need financial inclusion, who will need financial independence, who will need access to financial services suitable to them. And I think that's where I would like to have this discussion on how the banking ecosystem has evolved to catch up with the youth in India, wherein we not just build them because of a priority, but as a responsibility. I think that's
And before Bharatji, I come to you, just to follow up to both of you, like a quick one. Do you see in 3 to 5 years, Indian fintechs will go global? Has the time come, maybe Gulf, Europe, Southeast Asia? Because a lot of talk has happened, but one really hasn't seen, we don't see these brands when we travel outside, right? And these are the largest and most advanced brands tech-wise in this sector. So do you feel we'll have a topic of why, say, a Singaporean regulator should be more moderate?
I think India is already creating templates for the world. UPI is not just a poster story, but it is getting entrenched in many other economies. The kind of scale and diversity we have, somebody said it beautifully, we are a Mao market right now, but the models that will evolve here will be able to fit in multiple geographies, continents. So I think I only see it from that lens. Yes, cross-border as a reality that will happen, and it's already happening in some form.
So I have witnessed this kind of situation last year. So I was in one of the event which is largest in North America, where a lot of European companies, US and Canadian companies were there. What I observed was they were still talking about payment solutions for shopkeepers, payment solution for mid-sized companies, SMEs. Here we don't talk about it, right? Why US companies succeeded as a technology companies and went to global? Because they had a DNA of thinking about technology since their childhood. I think that's happening in India right now. 2015, when we started, it was very difficult to create e-mandate. तब तो e-mandate था नहीं, normal mandate create करना भी difficult था. आज it is happening on UPI. मतलब आजकल अगर कोई बच्चा fintech company start कर रहा है, तो सोचेगा भी नहीं, ये तो ऐसे ही होता है. So now that DNA has come up in ourselves, and this will lead to next round of innovation when we are going global. And I feel government will somewhere require private companies to take this solution to the globe, because government will not be able to take that solution in different countries. And possibly that's where I see the scope and the same thing which is happening as part of the global events and the discussions also.
Very, 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 very good points. Bharatji, closing thoughts?
So, I believe next 3 to 5 years, when we launched UPI in 2016, Nandan said that we will see the WhatsApp moment in India. as far as payment is concerned. We have exceeded WhatsApp, we have exceeded everything, and everybody is doing UPI today. But next scale is a next big thing to happen. Because while we are still, taking pride about UPI and the way we have disrupted the market, but, the reach of that innovation is still only limited to India. It hasn't reached to Bharat. It has to go in the Bharat first. Dunia baad mein jayenge. But, 20% people sitting in this room are from Bharat, from India. I come from Bharat. 80% people were village and the tier 2, tier 3 people are living. How we are going to make change in their life when they will start doing everything using one or other technology solution in their life, that would be a real innovation outreach in our country. Scale is, therefore I'm saying the scale is going to be a next big thing. And not only payment, I mean, let's say for an insurance, let's say for, the mutual fund, let's say for stock market, let's say for any other, evolving business. Do you think that Amazon has reached to every small village in our country? No, not at all. So, the scale is going to be a much bigger thing in coming years. Again, everything, all innovation, definitely a regulatory watchdog will always watch them. But on a lighter note, I must say that it is for us to behave in proper manner because, time has changed. Earlier, when we used to break signal or any traffic rule, कुछ 50 रुपए देके निकल जाते थे. And once you left the spot, there is no evidence, nobody is watching you. And nobody has even iota of doubt that you have broken a signal just 5 minutes before. The time has changed. You are now being caught on CCTV camera, each alarm comes on your mobile, and you notice also come on that. Something similar has gone in the DNA of regulators, various regulators, where they are putting a lot of control, a lot of watch, kind of observation system, where even though if you are not telling them, they are monitoring from the distance. Keep that fact in mind, because if you are doing something which is not as falling in the line, at any moment they can catch you, right? So therefore, scale it, innovate it, but always keep, there is somebody watching on you. There is always watch on you forever.
And regulators using generative AI can result in very...
They have gone much ahead. No, they have gone much ahead. Let me tell you, they have gone much ahead because that is, and I'm not talking only about the, the banking regulator, but every regulator has come out with so many innovation. Because see, when any innovation happen, you are not the only, user of that. There are multiple people, they are using it, right? Be it, the UPI what we have created, but the best use case, if I say, was done by Jamtara gang. Yes. They have made huge money after UPI was launched, and they figure out the loophole, and they minted money like anything. So the innovation is not limited to a class; it is for mass also.
Thank you so much.